Welcome to Economic News Desk. For August 19, 2026, we are tracking three major shifts moving through the global economy. A high-stakes, three-day window of uncertainty in North American trade, a surge in UK inflation driven by energy costs, and a massive market debut for a Chinese robotics giant. In North America, a sudden three-day pause has been placed on a massive wave of proposed tariffs between the United States and Canada. President Trump announced the delay on a 50% tariff targeting $20 billion worth of Canadian imports, a move that was scheduled to take effect just 2 hours before the announcement. These levies would have hit a wide range of goods, from hockey sticks to tongue depressors, and they represent about 5% of all Canadian exports to the US. The administration is utilizing Section 338 of the Tariff Act of 1930, a legal mechanism that allows the president to impose tariffs on countries deemed to have discriminated against American businesses without a formal investigation. While a White House proclamation states that Canada has committed to removing measures seen as discriminatory against U.S. alcohol, dairy, and motor vehicle exports, Canadian officials have been more cautious. Prime Minister Mark Carney has noted that while substantial progress is being made, important work remains. This three-day window is a frantic race to finalize a deal that could reshape North American trade. Negotiators are working through complex issues, including digital trade alignment and market access. There is even discussion about reducing U.S. tariffs on Canadian cars from 25% down to 15%, though there is still disagreement over which specific vehicles would qualify. On the Canadian side, there is interest in reducing tariffs on steel, aluminum, and lumber. Because liquor sales are managed at the provincial level, any deal involving alcohol would require cooperation from leaders like Ontario's Premier Doug Ford. If these negotiations succeed, the resulting stability could even pave the way for the revival of the Keystone XL pipeline, a project that has been blocked for years. For now, however, business leaders say the pause has left many in a state of limbo, waiting for a signed agreement to replace the threat of sudden tariffs. Moving to the United Kingdom, the cost of living narrative has taken another difficult turn. Inflation rose to 2.9% in the year to July, marking a 4-month high. This spike is being driven primarily by surging energy bills. A 13% increase in the Ofgem price cap earlier this month has added roughly £221 to the average annual household bill. While food inflation has actually slowed to 1.3%, the lowest rate in nearly 5 years, the energy pressures are mounting due to external geopolitical and environmental factors. Tensions involving the US, Israel, and Iran have restricted global oil supplies and impacted critical shipping routes like the Strait of Hormuz. At the same time, a heat wave in Europe has increased the demand for gas-to-power cooling systems. Economists warn that these energy costs could push inflation as high as 3.5%. While some analysts still expect inflation to hit the Bank of England's 2% target by next year, others worry that potential drought-related spikes in food prices could make that path much harder. For now, the consensus among experts is that the Bank of England is unlikely to change interest rates at their September meeting, with many expecting rates to remain at 3.75% through the end of the year. Finally, we look at a major milestone in the global robotics race. Unitree Robotics, a Chinese firm, made its market debut on Shanghai's Star Market, and the reaction was explosive. Shares closed up over 460% on their first day of trading, reaching 845 yuan per share. This is the first time a Chinese humanoid robot manufacturer has gone public on the mainland. Unitree is a significant player because it is one of the few companies in this high-growth sector that is already profitable, reporting a net profit of 278 million yuan in 2025. The company has become a major disruptor by producing robots with similar features to US developers, but at a fraction of the cost. For example, Unitree's robot dogs start at around $2,700, whereas Boston Dynamics' Spot costs roughly $70,000. This rapid growth highlights how Chinese manufacturing is increasingly challenging US dominance in high-tech robotics, a sector viewed by Beijing as a strategic priority and a potential solution to labor shortages caused by an aging population. The sector has become a geopolitical flashpoint. The US administration has proposed bans on certain Chinese-made humanoid and quadruped robots, citing national security concerns, while Beijing has accused Washington of politicizing trade. While experts suggest that practical, widespread home use of these robots remains years away due to challenges with battery life and reliability, the immediate focus for the industry remains on industrial and hospital settings. Whether it's the volatility of high-tech markets or the unpredictable cost of household energy, today's developments highlight how geopolitical and environmental factors continue to reshape global economic stability.